Stocks mixed, dollar slightly lower as major events loom. Asian stocks were mixed at the beginning of the week, with the MSCI's index of Asia-Pacific shares outside Japan dragging nearly 0.5% lower by selling in Hong Kong after weekend data revealed a sharper-than-expected contraction of Chinese factory activity. On the positive side, a sub-index for the new orders rose from 50.8 to 51.4 in September. Meanwhile, Japan's Nikkei 225 rose 2.3% to notch a one-month high after Prime Minister Fumio Kishida's Liberal Democratic Party won a comfortable victory. Wall Street stocks climbed to fresh all-time highs on the first trading day of November despite mixed economic data out of the United States. The IHS Markit's manufacturing PMI declined to 58.4 from 60.7, while the ISM's manufacturing PMI arrived at 60.8 to come in slightly better than market expectations. The employment index edged higher to 52 from 50.2. As such, the Dow Jones gained 0.26%, the S&P 500 rose nearly 0.2%, and the Nasdaq Composite added 0.6%. Overnight, U.S. stocks finished higher to hit fresh record highs ahead of the outcome of the Federal Reserve meeting and fresh economic data, including the employment report due on Friday. The Dow Jones Industrial Average, closing above 36,000 for the first time, gained 0.4%, while the Nasdaq and the S&P 500 added 0.3% and 0.37% respectively. In individual stocks, Tesla finished 3% lower on Tuesday after its CEO Elon Musk said the company has not yet signed a contract with Hertz for its mega order of 100,000 vehicles. As a reminder, a week ago, Hertz announced it would grow its fleet of battery electric vehicles with an initial order of 100,000 Teslas by the end of 2022. Despite positive dynamics in Wall Street stocks, Asian markets were lower on Wednesday ahead of the FOMC meeting outcome. The Shanghai Composite in China was hovering just above the flat line, while Hong Kong's Hang Seng Index dipped 0.30% after trimming intraday losses. In Europe, stocks opened marginally lower today as investors remain cautious ahead of the FOMC meeting. The U.S. Central Bank is widely expected to announce the beginning of asset purchase tapering later today. Also, the Bank of England is also expected to hike the rate by 15 basis points during the meeting on Thursday. The Pan-European Stoxx 600 oscillated just above the flat line ahead of the opening bell on Wall Street. U.S. stock index futures were little changed as well. The dollar remains resilient ahead of the outcome of the Fed's two-day meeting. The USD index retreated modestly from local peaks seen last Friday when the U.S. currency rallied across the board. The greenback failed to preserve its strength as risk sentiment turned mixed in the global financial markets. However, as trading conditions are getting thinner ahead of the Fed's verdict, the dollar stays afloat in general at this point. Should the U.S. Central Bank announce the start of tapering, the dollar could see another rally in the market following the decision. As such, the euro may struggle to get back above the 1.1600 figure in the short term. Furthermore, the euro-USD pair could plunge the fresh mid-2020 lows below the 1.1525 region to challenge the 1.1500 figure. In other markets, crude oil prices have been losing ground for a second straight day in a row on Wednesday, struggling to regain the upside momentum following a rejection from the $85 figure. Brent crude has settled just below the $83 mark during the European session ahead of key events this week, including the OPEC Plus meeting. The United States keeps pressuring the OPEC Plus alliance to pump more crude amid a surge in oil and gas prices. Still, the group is widely expected to reconfirm plans for monthly increases when it meets on Thursday. In this scenario, the oil market would derive some support from the decision. Overnight, the API report showed that U.S. crude oil stockpiles increased by 3.6 million barrels last week, while gasoline inventories fell by 552,000 barrels and distillate stocks rose by 573,000 barrels. As the Institute reported the sixth straight week of crude oil inventory buildup, the release added to a more downbeat tone in the market ahead of the data from the U.S. Energy Information Administration due later today. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.